Hey everybody, welcome back to another episode. I'm your host, Brennan Cobb, and today I've got Tim Bratz on the show. He is the founder of Legacy Wealth Holdings, a commercial real estate investment company with internal property and asset management. They've got over 350 million in commercial real estate, over 2,800 doors. He's also the founder of Smart Management, which is an AI-enhanced all-in-one property management software solution. We're going to be talking a lot about AI today, so stay tuned for that. He's also a big social media influencer. I've seen a lot of his stuff. And honestly, guys, just a really highly regarded man in the real estate space. I know a lot of people who've been in his mastermind programs, his multifamily stuff, and they've got nothing but exciting things to say. So I always love getting guests on here who have a great reputation. Tim, it's a pleasure to see you. Welcome on to come to the show.
Brandon, appreciate you having me, bro. I have a ton of respect for what you got going on, and obviously I had you on my podcast, and it was an awesome episode. Got tons of great reviews on it, and excited to be here and share any sort of insights, knowledge that I can on my side.
Yeah, this is AI. AI agents is a hot topic. I've been staying up till 1 in the morning every night building these things and automating what I used to pay people to do, which is crazy. So I definitely want to cross pollinate some ideas and hear, what's going on with smart management and just how you guys are navigating this thing and what you're creating. Because you got to be unemployed just to keep up with all this stuff.
No, man.
Before we jump into that, before we're on the show, we were talking about how you were clearing a lot of things off your plate just to focus on your AI powered software, smart management that helps commercial real estate investors optimize their property management. You merged your mastermind with probably one of the number one most highly regarded masterminds in the nation, Collective Genius. I know you're selling like 800 doors, and you're really trying to kind of get some stuff off your plate, at least what it looks like, in order to focus on this new software. So, can you tell us a little bit about that and kind of the motivation why?
Yeah, man, absolutely. And what I've found is in growing in businesses, man, I take these big leaps forward. As entrepreneurs, we're like, yeah, let's go, ready, fire, and then aim kind of a thing. And that's been my MO in business, right? I grow really, really quickly and I go all in on something and it does amazing. And then I have these periods of refinement, right? These times where, all right, hey, that worked great. Now let me reflect on what I really enjoy doing, what works really, really well, what is the most lucrative, what is the most fulfilling, and let me trim out the other stuff that's not. And man, I grew my portfolio relatively. Here's the thing. It all compounds overnight, but when it compounded, I got a lot of eyeballs, and it compounded pretty considerably. And I've been investing in apartments since 2012, and been investing in real estate since 2009, but in the industry since 2005. So I've had a long runway in being in real estate, but in 2016 I had maybe a few hundred doors, and in 2017 I got another few hundred doors. 2018 I collected over 1,000 more doors. 2019 I bought 2,000 doors. 2020 I bought another 1,000 doors. So like I had a lot of growth in a span of a few years, and a lot of that came from people in my network, people who came through a coaching program and who brought deals that said, hey, I found this great deal. I'll operate it. Tim, will you bring money, or will you sponsor the loan for me? Will you mentor me and coach me throughout it? And so I was able to do that. And I was in 12 different states, 5,000 doors. And that sounds cool, but that's really the coolest part, is just saying that you own 5,000 doors. Owning it, managing it,
Yeah.
traveling to 12 different states, sending your team to 12 different states, getting hotels and cars and being away from family. Dude, that's not fun. And I found myself when the tide went back out, dude, a lot of people got in over their skis, and a lot of my joint venture partners got in over their skis. A lot of the management companies got in over their skis. And I was the only one who actually built the muscle to be able to bring more money, to efficiently and effectively run these things. And I was on the hook from the credit standpoint. And I got to a point where, like, literally we were moving everybody out of the way, bringing all management in house, cleaning up processes, buying out equity partners, buying out GPs, just getting rid of them altogether, kicking third party management out, bringing it in house, and injecting millions of dollars back into these deals in order to then reposition, restabilize, and then exit them. And so I've been able to sell off about a little over 2,000 doors. And I would say, dude, I'd say my portfolio is a third of it's friggin' awesome. A third of it, great, solid, just good, what you would expect. And a third is like a big pain in the ass for me right now. And I think I am probably one of the least stressed, right? I was very stressed for 3 or 4 years, but I know what's happening behind closed doors. Man, I know $2 billion debt funds who are just being clobbered right now, right? I know a guy with 26,000 doors who's third generation, owned this stuff for a long time and has it paid down and is getting absolutely browbeaten in the industry right now. I know a C-level executive at a publicly traded commercial real estate firm who owns billions and billions of dollars of property, who this guy never is off his phone because it's just nothing but arrows coming at him at all times. So it's like, dude, you can blame, and there was a lot of stuff about um, Brandon Turner that came out recently and how he lost money on a deal. And everybody's like, well, like, dude, there's so much
Mhm.
behind the scenes, right? You're only hearing about Brandon Turner because he's got social media presence. And so it's a little bit more obvious. But the reality is this is like people far like that company that's publicly traded, they have entire floors of analysts looking at every single economic metric and variable, and they didn't see everything happening at once, right? Meteoric rise of interest rates, insurance doubling, tripling, quadrupling in some markets, 26% increase in property tax assessments, labor force going up, increasing by 40% over the span of a few years, uh, supplies and material increasing by 50%. Energy costs are up by over 40% also. Like all these things happened all within a span of 3 years, all at the exact same time. And it's like you, for all these guys that are and people who want deals to happen, hey, take my money, take my money, take my money, and all of a sudden you hear that enough as an operator, and you go and take somebody's money to go and deploy it so that way they can make better returns on their money, and then all of a sudden things go sideways and everybody blames the operator. Like it's, don't get me wrong, there's some operators who have completely dropped the ball, and there's a lot of really really good operators who are taking just fire nonstop, man, that nobody could have seen what's happened in the market over the past 3 or 4 years, all happening at one time. And anybody who tells you differently, right, is full of it. Because everybody was trying to get more and more money into commercial real estate. So, if you raise money on a deal and you take an investor's money, it's going to be taken care of. Versus if you say no, they're going to find somebody else to go and throw their money at who isn't going to take care of it. And it's like it's a weird world and circumstance. I'm not saying you just take people's money and go and be reckless with it, but at the same time, everybody's trying to get deals done and wanting to make deals happen in 2020, 2021, 2022. And it was a big rush, man. And so anyways, I got found myself taking back all these deals, finding myself cleaning up all these projects and realizing as I'm cleaning all that stuff up that's not fun, my property management software, Smart Management, really started getting exciting. There's a lot of really cool stuff that's integrated into it, and we can dive into that. Um, and you start doing the math, right? And simple things like, hey, my coaching business, might bring in $1, and I get to keep 30 cents of that dollar, right? But when I go to sell it, at most, it's worth a 1x multiple on top line revenue, right? As a
Yeah.
coaching business.
Very, very difficult to sell coaching businesses because usually you're the coach, you're the, brand behind it.
And and then you take a look at a software business. And my software company, for every dollar we bring in, we keep about 70 cents of that dollar. And because it's AI layered and it's prop tech and it's fintech and it's SaaS, you start adding in, looking at what those multiples look like. And the median multiple is somewhere between 10 to 20x top line revenue. So for every dollar I bring in, it's worth, call it $15 of enterprise value. And you start looking at it in a non-emotional way, because I love my mastermind and I love coaching and I love the fulfillment that I get from it. But from a business standpoint, it didn't have what the SaaS has. And even the commercial real estate, dude, I have to go and buy another property, sign on another loan, raise more capital, take on additional risk, operate it, turn it around, reposition, right? In order to get, yeah, I mean, back before the market shifted, maybe you got about a 50% of top line revenue. 50% is your net operating income minus your debt service, and you end up keeping 10, 20% at the end of the day. With expenses skyrocketing the way that it has been, and with interest rates being more expensive and debt service being more expensive, dude, it's a break-even world now for properties that you had previously. That's not to say that there's not opportunity in commercial real estate. You could still buy a lot of smoking deals right now. I just don't think the properties that everybody owned prior to 2022 are going to come back. I just think you're in a tight spot unless you find another exit strategy. And there are other exit strategies. We're doing some condo conversion stuff right now that could take a loser and make it a winner. And some things like that, some creative solutions. But what we've obsessed over is just optimizing, net operating income and obsessing over controlling the controllables. There's a lot of adverse stuff that can happen to us. What can we control? And that gives you a little bit more confidence to go and attack business with. And so, found myself excited about smart management, being a far more lucrative business to be in, having more cash flow and having more enterprise value than anything else that I was doing. And just from a simple economic standpoint, I'm like, you know what I found, Brandon, is that the reason people don't reach like big success isn't because of obstacles that get in their way. It's because of lesser paths of success. It's because of easier businesses that they're already
They're
in.
not trying to hit they're not going for the grand slams, the home
Yeah,
runs.
hey,
They're just
dude,
going for the
it would
singles.
be easy for me to make $1 million a year in a coaching business, right? And just stay on that path and live a great lifestyle, right? And that kind of stuff gets in the way from somebody building a multi-hundred-million-dollar business, if not multi-billion-dollar business, right? It's paths of lesser efficiency, or paths of lesser success is what I would say, gets in the way of achieving the really, really great things. And I became aware of that and realized the same way that you graduate in real estate from being a broker to being a wholesaler to being a flipper to be buying and holding to getting into larger commercial stuff. I found that the next transition for me, and going from C class to A class, right? The next transition for me is getting into the software and then building this up over the course of the next few years, because it's such a desperate need in the marketplace. I'll take all that cash and then I'll just go out and buy my own A-class properties in A-class areas and continue building the portfolio that way.
Let me ask you something that I've struggled with. There's so much advice out there when it comes to entrepreneurship and growing a business. We talk a lot about it on this show, and you've got these egg list influencers like Alex Ramosi that talk about the woman in the red dress, right? Distraction is the killer of most entrepreneurs' businesses because they've got 4 or 5 different businesses. They're trying to grow them all at the same time. And I compare it to playing a video game, right? I'm a Halo OG, lived a lot, played a lot of Halo back in my day. And when you put that controller down and you pick up another controller to play like another game, what happens to your character when you're playing multiplayer? You get absolutely slaughtered, right? That's what's happening with most business owners when they put down that one controller and go start in like their other business. And so I understand and I get the woman in the red dress thing, right? Just focus on that one thing for a very long time. It'll compound. You'll get good at it. But then on the other end, I've lived where I did that, and I had all my eggs in like the development basket, right? Like land development, building houses. And we're building a lot of houses. We're building 30, 40 homes a year here in Nashville. When the interest rate things happened, and all of a sudden I found myself stuck with 40 homes that I couldn't sell, and I couldn't build them because of the supply chain issues. My adjustable rate debt, because you can't get a construction loan that's fixed rate, doubling. And all of a sudden, all this income that I thought was going to come in didn't. And I realized that, if you're going to be in development, you've got to have some additional sources of income. You got to be diversified. And so where do you draw that line? Because there seems to be a dichotomy in building something great and going all in on something versus having that diversification into multiple income streams when that inevitable event, in this case, the black swan interest rate rise, where, COVID put a lot of restaurants out of business. Like, it's not a matter of if that specific business is going to get affected, it's when. So how do you navigate all that and make a decision?
Yep, great question. I do think we've been sold this idea that diversification is best. Diversification is a great way to sustain and maintain wealth once you have it. It is a horrible way to grow wealth. All right. A guy named David Karp actually manages about $40 billion for only 160 families. $250 million cash that they each have with him on average, right? And he was telling me, he said every single one of those families built their wealth in a single vertical. And
Mm-hmm.
then once they got successful and exited, then they diversified their wealth into essentially four categories. And they do 25, 25, 25, 25. 25% in public equities, stock market, 25% in private equities, privately held businesses, 25% in real estate, and then 25% in dividend performing, dividend producing investments, right? Loans, notes, money market, CDs, whatever. And that to me made a lot of sense because to your point, dude, you can't juggle all these plates at one time and it's going to come into an absolute mess. That being said, I'm a big believer you need to have, most businesses are either all equity driven, right? Like when I was a real estate guy, man, I was just building up balance sheet, but I
Mm-hmm.
was always cash poor, right? And until I started taking fees or found some other thing, and that was great for building long-term wealth. And I knew that I could build some serious long-term wealth with my portfolio. I mean, you think about my portfolio today, it's $350 million. Let's assume it's fully leveraged. It's not, but let's just assume it is. 30-year mortgage, it's paid off in 30 years and it'll probably double in value in 30 years, right? So now I got a $700 million portfolio owned free and clear, and I own between 30 to 40% of it. So my net worth, $200 million if I never do another thing and just continue managing my portfolio. But I'm foregoing money right now for future payouts,
Mm-hmm.
right? And if you can do that, then great. What I think everybody needs and what I needed was you need fast money too, right? How can you produce and make $100,000 to $1 million in the next 30 to 60 days? You have to have a vehicle that can do that. And ideally, it aligns within 1 degree of what your long-term wealth building play is too, right? But you need to be doing both, right? I know a lot of wholesalers that have businesses, they make $100,000, $200,000 a month, but there's no enterprise value to that, right? And then there's other people on the other side of the coin that have big portfolios, but there's zero cash flow coming in because all these rising expenses have eaten it all up. And now they're trying to put food on the table. You need both. You need fast money and you need long-term wealth. And if you can find a business that has both of those things, like for me, my software business actually checks both of those boxes. So I feel good going all in because of the amount of cash flow that it brings in and because of the amount of enterprise value that it has. If I didn't have that, then I would maintain my coaching business, right? Because I know I can make $100,000 a month plus take home just to me. And then I know that the long-term wealth would be there. Um,
Mm-hmm.
I've also seen it like there's some guys in my mastermind who, the big thing right now is going out and buying service businesses. If you're in service
Mm-hmm.
businesses and you know service businesses, dude, go and get rich in service businesses and roll them all up and do that. But if you're a real estate person and you haven't ever built a service business, that can go to zero very quickly. At least in real estate, if you totally screw it up, you still have sell it for 70 cents on the dollar because the tangible real estate's worth something. And what I don't think you should do is go and open up a service business if you're still managing your rental portfolio. So what we talked about with this specific individual from my mastermind was like, dude, what's a 1 degree away? Well, you know what? I already have crews renovating apartments. I have my acquisitions guys looking for apartments all the time. And I say no to a lot of stuff that's under 20 units because it's just too small for our portfolio. So, you know what I could do is I could go and flip some of those buildings, those smaller type properties, anywhere from 2 units to 20 units. And I could keep my guys busy, keep my leasing team busy, and then sell them as turnkey investments to smaller investors. I was like, man, I love that idea because it supports your existing business, and but you have now active income, and if it doesn't sell, it rolls into your portfolio. You continue managing it, and you sell it whenever it does. In less than 6 months, he had made $250,000 and had another $700,000 of revenue on the books for when it would flip and when it would transact over the course of the next 6 to 9 months. So let's call it 12 months. Make somewhere between $600,000 to $800,000 of real cash that came into his business, came into him personally of active income without being a distraction from the long-term goal.
That's very cool. Yeah, because that's what I learned too, is we had to set it up similarly where, the construction company, we're already, building these houses for ourselves. Let's pick a few trades out. You get in and out really quick, the big stuff, framing, roofing, siding, drywall, make a quick pop, keep the guys busy. They're already working for you. It doesn't cost or take a whole ton of effort keep that ancillary business going because it's already a part of like the main business with development, so we did that. And the same thing with the coaching, like we want to do the coaching. We had a lot of people reach out to us about land development and doing that and teaching that, and it was a way to source deals at the same time, right?
Drives deal
So
flow and investors, right? Like
yeah,
that's a good 1 degree away business.
yeah. So that we kind of figured out the same thing. So that's interesting hearing you talk about that because you're kind of echoing sort of what we figured out too on your smart management platform. Tell me a little bit more about that because I've been completely obsessed with building AI agents, which I don't think a lot of people can even comprehend or understand. But we're moving towards what I call the agentic economy. These things are going to be transacting, doing deals, doing business. Human beings, not so much, but we're still very new with all this. Tony Robbins, Dean Graziosi, they launched a little thing earlier this year, and then Russell Brunson was right behind them with his little AI agent launch. And now you got Grant Cardone doing the ads, and I think late June here is when he's going to go with his little AI agent program. This thing is getting hot, right? We actually had to start doing a separate weekly AI mastermind call that was separate from our Wednesday strategic land coaching calls just because it became so hot. And we had to create a course on how to, teach how to build these AI agents and run your business and how to set up a virtual private server. I mean, this thing is taking off and I am blown away at the capability of everything. How did you go about creating some type of service that helps commercial investors just skyrocket the efficiency on their property management? And did this come from like some of the complications you were having with your portfolio, with some of the challenges that the market's thrown at it? Like, how did this come to be? And then I want to hear more about like what you built, and I want to kind of go deep on the rabbit hole because I'm all in on the whole AI agent thing.
No, I love it, man. And I think this will be a good dichotomy because some people are very tech savvy, right? You are far more tech savvy than most real estate investors. I'm not that tech savvy. We were talking offline, like I was trying to figure out my camera and my microphone because my AV team's not here when I'm up in Ohio for the summer. And so I'm not the AI agent building the stuff, but I have the people on my team to do that, right? And I think that's a good awareness piece for people to have is that even if you're not it, you got to have people on your team doing this stuff because it is the new thing. And even if you're not the one dialing in and building out the agents and everything, make sure people on your team understand what's happening. And that's more the seat that I sit in. I'm going to back up 5 years. In 2021, one of my biggest investors who had multiple seven figures with me is very high up in I think I could say it. Rockwell Automation. Rockwell Automation is a $45 billion company. They're like the engineers of engineers. And massive organizations like Northrop Grumman and other defense contractors and Disney and NASA and Tesla, like the Boeing, they all go right to them in order to help them put more efficiencies in place on a lot of their processes and systems and the engineering side of things. And so one of my big investors was very high up in that company. And he came to me after he invested seven figures into a deal and he was jumping on some of the asset management calls. And he's like, man, we spend literally 80% of the time trying to get everybody on the same page, right? This is before all the AI stuff. Before it was because we had a CRM, we had workflow management like Monday.com or Asana. We had property management software. We were using Appfolio at the time. We had QuickBooks. We had document like digital signatures. There's things in Dropbox. There's things in Google Drive. There's things written up on a whiteboard. There's stuff all over the place, and nothing's communicating with each other. Right? We probably have. I know I spend at least a little over $300,000 a year on softwares just to run my real estate operation. 300 grand. And none of them talk to each other, right? None of them there's plugins, there's apps, there's all this other stuff. And and then I've got property managers communicating with prospective tenants through their cell phone, through their Gmail accounts. And if that property manager gets fired or gets leaves on their own, and then there's a lawsuit or something with that tenant, we can't get access to that communication anymore, right? And so it creates additional liabilities to not have everything in one spot. And so this investor of mine said, "Hey, man, I want to create something and build something where it puts everything in one location, an all-in-one solution, full enterprise management system." And then I want to layer it with all sorts of automation. So that was the original intent 5 years ago. In June of 2021, when I sat down with him, we did this, bootstrapped it. I put up half the money, he put up half the money. And within 12 months, he left his job because he knew what we were building was so big. And he grabbed the top 3 developers he's ever worked with at any organization. And so we have 3 world-class software developers, plus my engineering buddy too, who's absolutely one of the most brilliant people you've ever met. And they're going all in on building the framework for this thing. And they build it in a way that is malleable and can evolve as technologies evolve, right? Like some of the big clunky softwares that were built 20 years ago, you got to break it and rebuild it in order to then capitalize on a lot of the new technology that's out there. And so they know better and they know how to do it the right way. And we didn't build it to be a minimum viable product. It is a maximum viable product. And so what we've done is we've taken all the different components, everything that you would need to effectively and efficiently operate a commercial real estate property or any rental portfolio. If you have 2 single family homes, you can use this software for that. And it's all in one place. So because payment processing's there and accounting's there and the software and the investor management and everything's in one place, we can real time reconcile financials, right? You press a button and it takes a look at everything. You don't have to wait until the 15th of the following month in order to get reconciled financials, right? In that scenario, you're always operating your business in a reactionary mode. It's like driving a car down the street, looking only in the rearview mirror. What happened last month? Not instead of looking forward, you're bound to crash. And as crazy as it is, that's the industry standard. And so, the idea here is that I keep on going into the team and I'm like, listen, I want to 100% fully automate property management of an apartment complex. No human beings needed at all. Now, do I ever think that we could get there? I actually do think we could get there eventually. Do I think it's going to happen in the next 12, 24, 36 months? Probably not. But when you go in with this big, hairy, audacious goal like that, and it breaks the concept of, because what I don't want people thinking in my team is like, well, this is how it's always been done. That doesn't matter. We're going to completely flip this upside down, light that on fire, and create a new way of doing things. And it's made the software so awesome.
So why can't you 100% automate? I mean, what I'm seeing right now, Tim, like I've got an AI agent that does all my bookkeeping. It's trained on 7 years of QuickBooks data. It comes in, it shows me a report. I've got my own little customized little mission control built with Claude Code. It's directly API keyed into my QuickBooks. It shows me all my transactions. If they're green, I'm like, cool, it cost coded them correctly. If it's red, it's like, hey, I wasn't quite sure. 99% of the time, it gets it right because it's trained on all the past transactions. So the bookkeeping's there done. I've gone into certain rentals where all I had to do at the door was like scan a QR code, download the app, upload a picture of my driver's license, and I could go tour the property. I'm like, okay, they automated that. There's systems now where it is rerouting like you call in if you're a tenant, for example, and you've got a problem with your furnace going out or something, and it'll say, okay, hey, what's wrong, furnace? Okay, yeah, here, let me reroute you to the contractor real quick. And it just reroutes it directly to the contract team that the property management company was going to have to call. So you've removed that bottleneck. So that's there. I'm like, why can't you automate 100%? Like where have you seen the most success in the property management, and then where are the gaps still left to fill?
Yep. Great question. So ours does all those things too, right? It does everything that you're talking about from a marketing standpoint, easy, right? Even a leasing standpoint, pretty easy. Showing units can be done efficiently. We have found in a lot of portfolios that we've implemented like the keyless entry type stuff, and somebody shows their own. Dude, we've had people go and actually like get the code and then lease the unit, and somebody signed a lease with some stranger from who got the code off of the internet, and then said that they leased it, paid some other random stranger a deposit and first month rent. They show up with a box truck to move all their stuff in, and then they can't get in again. So like we've seen some scams, and that's something that we're navigating right now. It hasn't happened. It's happened in my personal portfolio, but it hasn't happened with smart management because we haven't integrated that yet. But it's very close, right? If we can figure out how to
Mm.
resolve that, that could be something. Our AI agents, right? We take the phone call on that HVAC, and then our AI agent will look up because it has all the data. It knows what unit they're in. It knows the make and model of the furnace. It'll look up the user manual, read through the entire thing in 3 seconds, and it will actually troubleshoot with the tenant how to fix the problem themselves, right? So it eliminates about a third of all work orders. And then it actually, if it can't figure it out, it'll create the work order, put it in the maintenance guy's task list, and it'll prioritize it based on
Mm.
the safety side of things and the financial impact to the property. So it does all this stuff where it makes it a higher priority if it has a financial impact, a bigger financial impact to the property. And then it puts it in their work task list for the next day. Maintenance guy shows up, and they don't even have to think of where they're going. It's not just based on first in, first out kind of a thing. It's prioritized based on the most efficient way to manage that asset. And it's got all of our SOPs from our operation integrated in there. So if somebody doesn't have experience with owning and buying 7,000 doors like we do, they can borrow and utilize ours. And if they do have nuanced operations in a certain market or a certain asset class, they can obviously customize all that. So a lot of that can be automated. The accounting can be automated. The finance can be automated. Lease renewals are totally automated. Like, why is anybody picking up a phone and calling a tenant when
Yeah.
AI can just send a message to the tenant? Hey, your lease comes up in 90 days. You've been a great tenant. We'd love to renew you. You're paying $1,000 a month in rent. Should be 1,100. I'll tell you what, if you sign right now, we'll only bump it by 3% to $30 instead of the full $100. They say, great. They sign the lease. It's all automated. It's all digitally done. Sends it back to the AI agent. It's uploaded directly to that tenant portal and to the property portal. No human interaction needed whatsoever, right? And if they don't
Mhm.
sign it, then it'll create a notification to send, or it'll follow up usually 60 days out, 30 days out, and we incrementally bump up the rent so that way people are motivated to sign a lease sooner and just knock all that stuff out. But if they don't, and they say, hey, I'm moving to California because my daughter just had my first grandbaby. No worries. Do you mind if we send someone out just to kind of assess what's going to be needed in order to turn the unit and blah, blah, blah. And it prioritizes that earlier on while the tenant's still in the unit. So that way you can get a scope of work, get a quote, maybe even do the work while the tenant's in the unit and have it pre-marketed and ready for a new tenant to move in as soon as that former tenant moves out. So it does all those things, and that can all be automated. I think the biggest hiccup, which is part two to our software, is we're creating a vendor platform. And in order for vendors to get paid, right, they have to be part of smart management. They have to log into, there's a vendor portal of smart management, and anybody can do that. It doesn't cost them anything. But then it polices all the scams and the fraud and all that stuff, and only allows you to make payments to accounts that you've already made payments to. It'll flag it if somebody's asking you to make a payment to a different account. So it does a lot of security type things as well. But eventually we'll have this vendor portal with a lot of different vendors all across the country in HVAC and whatever. And eventually we'll have something almost like an Uber for vendors. And that means you don't need a maintenance guy anymore. So you can actually put it out to a whole bunch of vendors, see who would raise their hand to do a unit turn at the lowest price, most efficiently. And then they have automated access into the unit. You can give them keyless entry. They then turn the unit. You don't even have any maintenance personnel anymore. So what we've already done can probably wipe out, if you got 3 property managers at a 200 unit apartment complex, you can probably clear out one of those salaries at least and save $60,000-$70,000 a year on a salary, which not only goes straight to the bottom line, but it also increases the enterprise value by over $1 million on that property, because now you just have a more efficient system in place.
Yeah, a lot of people don't talk enough about that, increasing the value of the property through the efficiencies. I had a guy, Bill Douglas, on the podcast a couple months ago, and he was talking about how he was using data to increase NOI by like 3-5%, which people are like, 3-5%. Yeah, that's a pretty big deal when you got multiples and net operating income, and like every little bit counts when it comes to the cash flow and getting those multiples on your net operating cash flow and your
Hey,
and your
Brent,
cap rate.
I want to show everybody, hold that thought, right?
Yeah.
On this guy. I just want to show everybody so that way they see what that
And if you're
does.
listening right now, go watch the YouTube channel because he's showing his phone right
Yeah.
now
And all I'm doing is,
on the screen.
and I'll talk through it. But think about a 100 unit building, right? And actually $3 per unit per month. $3 times 100 units times 12 months, it's assuming full occupancy, is an extra $3,600 a year, right? This could be something as small as tenant liability insurance. You implement tenant liability insurance, require your tenant to have this. You can make an administrative markup on that, call it $3 per unit per month. And on that $3 per unit per month, it goes straight to the bottom line. There's no expense. It's just pure profit. Call it at a 90% occupancy. That's 3240 per year, divided by a 6% cap rate. Increases the enterprise value to that of that building by $54,000 just by doing something that nominal, that simple, where you're not even, nobody bats an eye at it. And you just made an extra $50,000 to your net worth, right? Or to your partnership's net worth by doing something that simple. Now let that compound with reducing property taxes, reducing your insurance, reducing your utilities, tightening up your operations, hardening the property, putting more efficient management in place, reducing payroll expense, right? Having better supply and more efficiently in turnovers, reducing your vacancy, as well as bumping up other revenue streams like that. Dude, you start looking at it, you can increase the value of your portfolio or of that property by literally millions and millions of dollars if you are very, very attentive to it. So sorry, I just wanted to make that point because it doesn't seem like a lot, but it's a massive thing when you take a look at what dividing something by a 6% cap rate, right? That multiple makes a massive impact to the asset value.
Yeah. Are you guys doing anything with data? Because the way he had pitched it to me, that was when you can go to a buyer, for example, or maybe an insurance company, because insurance has been the bane of
Mhm.
everybody's existence in the multifamily world, and go to them and have data on how old all of your fire alarms are and when they were replaced, how old your furnace units are, your history of your pump station maintenance. You're basically aggregating all the data points on everything that, let's say, has like a replacement value. And there's a lot of value to that. You can roll over your insurance rates if they see that you're taking care and updating things every so often. You've got that data. A buyer walking in might offer you less for something on the property because maybe there's some assumed risk of certain things not getting updated or going wrong. But if you've got the actual data to prove it, well, now you've got a little bit of a premium you can earn there when you sell it because they know the unit's been properly taken care of. And it's just really cool. And you can do it on the blockchain, you can do it on a ledger and have that data. It's kind of like my little Eufy vacuum. My Eufy vacuum has an app, and all the parts on it, the little wheel that spins, that sweeps the dust underneath, the little wheel that actually cleans the floor, the sensors on the side, all those things have a shelf life. And what's kind of cool is I open up my app and it's got a list of all the parts. And they've gone in and they've calculated based on the hours of usage what the lifespan of that part is. So if something breaks, it's not, oh, my Eufy's not working, my vacuum's not working. It's, oh, you just need to replace this part. And I'm like, that's freaking genius. It
Mm.
allows you to keep the product working at the highest optimal efficiency, which is user experience. And it's the same thing with like commercial real estate property or multifamily property. If you can keep that thing optimized, working at the highest possible efficiency, you're going to have better consumer or customer experience. You're going to have higher occupancy rates. You're going to have less turnover, and that's going to translate into more money in your pocket. So I was just kind of curious if you guys are doing anything on the data front with your software and what you guys are working on with the AI stuff.
Dude, I think data is one of those things that nobody realizes how much money is in data. You realize like Orange Theory. Orange Theory doesn't make any money, right? Like it sold a few years back because it was just like another gym trying to make money on the monthly subscriptions and all that stuff. When they introduced those bands, when people come into Orange Theory and the whoops and the all the wearable technology, right? That shows heart rate, that shows blood pressure, that shows resting heart rate, it shows oxygenation in the blood. It shows all these data points that life insurance companies would pay big money for. And that's what the buyer of Orange Theory did. They went in, bought Orange Theory, implemented these wearable technologies to get all the data from everybody working out. And then they turn around and sell them life insurance policies. They sell them health insurance. They sell them whatever the other things are. And they're already pre-approved in order to get these things, right? And so
Yeah.
that's how they make a lot of the money at some of these businesses. So what we've done, dude, you make a great point. Like to have clarity I mean, like there's so much speculation. How old's the roof? How old's the foundation? How old are the windows? How old is like all these things in when you typically go and get an insurance policy, and they have to price in the risk for that. What if we took it another step further? Not just how old is the roof and the mechanicals and the foundation, but like we have data at Smart Management on how well you screen your tenants. Do you think that reduces risk at a property level? You know, what their
Yeah.
income levels are, what the typical turn time is to take a unit from vacant to occupant to occupied, how quickly the maintenance division responds
Yeah.
to work orders. These are elements of data that no insurance looks at currently, that we have access to in real
Yeah.
time. So, dude, I truly believe, I think it'll probably be an insurance company that comes in and tries to buy us because of the amount of data points that we have. In Smart Management, we've actually put a master insurance policy together. This is something nobody's ever done, but we will welcome any users of Smart Management onto our master insurance policy. Currently, we're saving people anywhere from 20 up to 50% on their insurance premiums in order to come on with way better coverage. So it meets all the lender requirements and standards and all that stuff. And it's way more coverage and able to save people. Call it 30, call it a third. We could save you about a third on your insurance premium in order to come in to our policy because we have this big robust network of all these policies, and because of the buying power and the negotiating power that we have, we can now go in and negotiate deeper discounts. And because we have these data points, we can get tighter and tighter and tighter on the insurance side of things as we renew year after year after year. So we'll be able to continue saving money in a massive way. So that way you and I aren't paying for some crappy operators premiums, because that gets blended out all across the rest of us based on other claims that other people have. But we can reduce that if we can show good quality data in real time.
Yeah, I mean it's huge. It's a whole world that hasn't been tapped into yet. Like my car, so my Tesla car drives itself. When I bought it, I did not know that my insurance rate would fluctuate monthly if I went with Tesla insurance. Right, my Allstate insurance was fixed every month, but with Tesla, it gave me a little chart. It's like the more you use the auto drive feature, where you're letting the computer drive you to your destination. I use the full self driving, the lower my insurance cost, because it knows that on average, every 700,000 miles, a regular human driver is going to wreck, and it's going to cost X amount of dollars, injuries, all that.
Interesting. Yeah.
Well, with the self driving, it's like every, and Tesla's got the data, and I might skew this number, so go check it out. But it's like every 3 million miles, there's a wreck with the computer driving the car. And 87% of those, I remember that number, they say are not the computer driver's fault. It's like another driver that hit them. So it's like they can sell you an insurance policy now, knowing like, hey, the more you use this feature, like the lower your insurance cost.
Mm-hmm.
That is really cool. I mean, it's like futuristic stuff, and it's all data driven. I mean, it's going to free up trillions of dollars in transactional costs and just bloat that's in the insurance company. So very cool stuff there. Tim, we're coming up on time here, but tell us, the name of the software again. Who's it a good fit for? And if people want to learn more about it, or everything else that you got going on, follow you, where can they go?
Yeah, man. Well, thank you for having me. You asked a lot of good questions. I'm sure we can dive deep into the AI stuff even more in the future. But yeah, at Tim Bratz, I'm on social media. Again, I got nothing to sell on the coaching or anything like that anymore. So if I can help you and be support, point you in the right direction, and happy to be a resource for anybody who's listening. And if you're interested, if you have a rental portfolio, it literally from one door to tens of thousands of doors, we can help you optimize NOI and asset value by utilizing smart management. So just go to smartmanagement.com. You can schedule a demo and learn a little bit more about it. and we got some really, really cool stuff going on. So I'm excited how it's going to shake up the industry and make a big impact on people's portfolios that have been struggling over the past few years.
I'm excited to watch you grow, man. This is exciting. Thanks for coming on the show. And if you guys have listened to this episode and you think, man, I know somebody that really needs to listen to this, maybe they're in commercial real estate, maybe they're a property management company that wants to just do a better job of taking care of their customers, share this episode with them, point them in Tim's direction, and like and share this with other people. We will see you guys on the next episode. Thanks, Tim.
Thanks, brother.